The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 11 o'clock till noon Eastern Time. My pleasure to be at 877-927-6648. Yeah, it was good to be away. Of course, it was like a working vacation, but I did my opening call newsletter every single day. In fact, I thought I'd only do a couple of charts. I ended up doing a lot of charts. It was fun. It was also nice just having a break, being away from things. Getting some kind of perspective. And here we are. Dow was up over 100 points earlier on. Let me just finish putting the notation in here for the Chapman wave methodology. E, F, G/C. There should be a little bounce right here. Okay. So what we're looking at is the E-mini is up 0.25 at 24.35. It hit 24.47. 2-minute chart made a peak G right there with a little doji turnaround. See the MACD stochastic turning down. 10-minute chart made a peak D right there. And now has gone from the 24.47s, made a low so far today of 24.30. Yeah, that's a pretty big pullback. Up 100 points, then down. In the Dow, S&P is, let's see. So let's go through the numbers. Here we go. Get out of that. Get to the 120-minute chart. There it is. So what we're looking at is that the E-mini has made a peak D in the daily chart. I'm calling it a Chapman wave 5 for now. I don't see any reason why not. It's also a peak D. It's also a Chapman wave stalk leg formation. So there are a number of things going on. The MACD's negative, the stochastic's negative, and we'll be looking to see what happens over a period of 3 days, Monday, Tuesday, Wednesday. I had considered that the week before last was one of the most important weeks that I had least anticipated would be coming up for a number of reasons. Had to do with commodities, had to do with the stock indices, etc. Here we're getting the follow through. And what I'm really looking at, and this is going to be very important, you remember the three L's that I spoke about? That's the semiconductor index, that's MH, the Qs, the QQQ, NDX 100, and the XLK. And they had been the absolute leaders. And what happened over the period of the week that I was away, they had signals to suggest that they were topping out. They have topped out. And what's really important about what we're looking at this particular time is that gold has pulled back sharply. The dollar is trying its best to rally. But what I'm really looking at, and this is going to be why I say Monday, Tuesday, Wednesday of this week is going to, last week was the verification of what I was looking at, sell signal in the Dow. We were short the Dow for my subscribers, adding to short the semiconductor index. But what's really important about this particular phase, long the TLT, can you believe bonds? Can you believe the TLT goes from, we got in at 123, it's at 128.50 right now. I mean, this is the TLT. This is the conservative investment. And look at it, screaming in a leg D in the 120-minute chart, maybe getting a little toppy here, the G/C in the daily. But my contention has been that money might, at this particular point, that's why I said it was such an important period going into June, that this is the phase that we will see that if money comes out of equities, rather than just rotating through the different sectors, and we certainly saw that last week, IDB, just the biotechs, which had got hammered, just soared. They were fantastic. Even the PPH, this is the ETF for the pharmaceuticals, had a fantastic rally. Even some of the steel stocks rallied at the end of the week. So my contention here is that as soon as the rotation stops, we will start to get a deeper pullback. Until that happens, we've got to look at rotational corrections, and those rotational corrections can be very frustrating. However, if you're in at the right time, you're able to sit through some of the vicissitude of the market, those pop-ups that fail like today, and it allows you some breathing room. So now let's go through this. We've got the Dow INDU. The Dow right now is up 6. It made a high of 21,535 on the 10th of June. Pull back just 200 points to the 2133 level. Rallied sharply today to 21. I didn't see the exact price. I should know it because I'm following it all the time. But I just 21,506. So it failed by just 29 points to make an all-time high. Pulls back. This is that right arm failure pattern. The MACD is now negative. Stochastic is down at 70% rather than over 80%, and it was in the 96% area the other day, peak D in the short term. And what I'm really looking at in the OBV, what I'm really looking at is that when we are looking at the larger picture, and look at this right shoulder, this spike to the upside in the 120-minute chart. So far, it looks like a failure pattern. I'm going to get rid of these 120-minute charts because I need to show you what is going on. Let me get rid of the 2-minute chart as well. Sorry. 1 second. Hey, why is it taking so much time? There it is. Okay, that's out the way. So look at the Dow, the monthly chart. The monthly chart is still very strong in leg E. D and E is where I start to get a little nervous, but the MACD is still very strong. The stochastic is very strong in the monthly chart. So let me go through these one at a time. For me, it's the beginning of the week and almost the end of the month. It's worth taking a little time here. This right arm extension in leg E in the weekly chart is seen that the MACD, let me just double check because the day is young. The MACD is 453, 466. MACD has not yet crossed positive. And that's the thing that I've been talking about. Remember the rectangles? I've been talking about this for a year now, over a year. These rectangle formations have been fabulous at identifying the consolidations in the Dow weekly chart. This rally that we saw is the first one since the big rally back in 2016, where the MACD and stochastic didn't give you the buy mode signal. They didn't confirm the rally. We still haven't got a confirmation of the rally. That makes me a little nervous in the short term, just to suggest that the consolidation is continuing. Today was the opportunity for the Dow to try to make a new high. It hasn't so far. So I'm looking at this and I'm saying, okay, that's why I'm saying Monday, Tuesday, Wednesday is so important. Get the parameters. A Dow close below 21,200 anytime this week would signal, okay, we're done. Rest period is unfolding. Could take a few weeks. A punch to the 21,550s, a breakout to a new high, very positive. So far, it hasn't happened. The S&P, gosh, I forgot all about these breaks. Came up so quickly. The S&P 245.3.82 was the high of the 19th of June. Tried to get there today. Failed at 2450. 3.5 points, just 4 points below. We'll watch very closely to see what happens. Basil Chapman, I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So this is it. So the SMHs in the den, Mike said, have a look at the SMHs below 85. Yep, they're at 84, 89. They spiked up to 86, 68. And as far as I'm concerned, everything, all I did over the period of, I'd say 10 days, is really look intensely at the semiconductors, the different stocks within the semiconductor group. And my analysis says that the upside, there was potential for a couple of stocks to push a little higher. But if you look at LRCX, which is Lam Research, lousy, and peak F top, 167.05 on the 9th of June, peak E in the weekly, and leg D, and a Chapman Wave potential, Chapman Wave 5. This is, I'm getting a little worried here because I think that they're overdone, and I the way it's looking, the weekly charts look like they should take at least 2 months to 3 months to digest these huge gains. They've been fantastic, on fire. And I'm just, something's not right here. I think that we are due for a rest. Now, what happens if we rotate and we go back into the IBB, or you go back into the PPH, which is the, this is, I didn't put the notation of the pharmaceutical ETF. Nice bounce, but so far I have to just think that these are bounces, very good bounces, but bounces nevertheless. Now, let's continue. So the S&P, SPX, S&P rolling over, rounding formation, a rounding top. The MACD is very, very weak. The stochastic is at 54%, extremely weak in the daily. Weekly chart is a flat stochastic, and that says upside limited, but you keep the trend that's in place, and so far that's an uptrend. Stochastic at 89%, still very good, but starting to become a little weaker. Was in the 94, 95% area. Now it's pulling back. Monthly is still very strong in the S&P. Parameters to watch: a close this week below 20. It's at 24.39. A close below, I'm going to give it a little bit of room, 24.19. Oh, I'm sorry, I didn't mean that. 24.29. That's what I mean. 24.29 starts a deeper correction. All right? On the upside, breakout above 24.56 is very positive. I just don't think it's going to happen right now. Let's go to the QQQ series. failure pattern on the day, but it's come off the low that was made. It was a double bottom at the 137s. Has a nice rally, bounces to the 142s, all-time high 143.90. Peak C. I don't think this is going to get to a D. I think this is going to be a peak C failure mode, and that will occur if the Qs this week on any day close below the gap low of 140.59. Whoa. Can't be 139.28. Sorry about that. But close below 139 changes the scenario completely to a down mode it's already in a down mode in the daily, but the weekly will finally go to some kind of a sell signal. Not yet a sell mode, a sell signal. That is the QQQ. The XLK right now, same thing, same pattern, same formula. Failure in the MACD stochastic. Weekly chart starting to break down. I think there's a problem here. The XLK, the S&P, select Tex Spider Fund. So that's a problem right now. It would have to at 56.74 as was that the high today? 56.72 was the high. Trading at 56.04. The close below 56 today says, not good action at all. So that's XLK. Let's look at the IWM. IWM has a nice big pop, pulls back, it's up down 30 cents at 140.61, made a high of 142.90. That was a peak D on the 9th of June. So far, it's a sideways consolidation. Starts to break down 140.63, starts to break down under 138.70. Break out to the upside. Actually, it doesn't have to be much more. 142.40 says, good action. Let's go to the gold. Gold right now is making lower lows and lower highs. It's still within a trading boundary area, and that boundary area is about 1,230. 1,200 and... Let's call it 1220 to 1218. That's a cushion, and the resistance is very strong at the 200-period orange weekly moving average at 1278, and it's trading at 1245 down 11. It was down much more earlier, but what I'm really fascinated with is that the monthly chart, and this has worried me for a while. One of the reasons why we got out of gold, we just said, hey, this is not for us right now, is that the gold monthly chart is. I've got a way longer term outlook for it that says at some point gold is going to the 1900 to 2050 area. That's long term, a few years. At this particular point, it's really just a sideways consolidation in the monthly chart after a spectacular run up, a spectacular run down since July, August of 2011. And it's come all the way back down, almost hit the 200-period moving average. And it looks to me like gold right now is holding well, but within a greater trading band. And that's really what I think is going to happen with gold for the coming weeks, actually. Silver has a slightly better chart on the daily than gold. But the weekly is a weaker one, and the monthly is an even weaker monthly. Silver says to me that it's going to drag gold. It's going to, not the other way around. Gold at this point is not going to drag silver up, and I'm just worried that if silver breaks 16, it's going to retest. Then it retests the low that was made back in December of 2016 at 15.811. So I'm a little concerned here. I think it's holding okay. If silver this week is able to get from 16.545 right now into the 1686 area, I'd say, you know what, that's much, much better action. Look at the dollar, DXY. The dollar, it just can't get out of its own way. It really is. It should have had a huge move. Every time gold's pulled back, it's just done a little bit on the upside. Right now, it's actually down 8 cents at 97.19. I just don't think, you know what, I don't see the dollar doing very much right now, but I also see that it's got quite good support at 97.18, 96.72 to 96.50. Better hold. That should be good support. The weekly chart says, tough time. It hasn't even been able to close above the 9-period moving average more than a few times in the past in 2017. Okay, this is going to be very interesting. Platinum, PL. Platinum has treated the 9-period moving average in the daily since its peak E top back. Was that the 9th as well? Everything was on the 9th? No, on the 6th. On the 6th of June, makes a high at 969.50. That becomes peak E the next day. And since then, once it's closed above the 9-period moving average, I think it's in the same sort of arch formation, weak formation. And I see a limited upside at this particular point. It has to break above 937 to really show strength, and it's at 916.40. I think it's going to retest the low that was made on the week of the 5th of May of 894. I don't really see much right at this moment for platinum. Wow, we've gone through another break. All right, we've gone through a break. Basil Chapman, Tiger Technicians Hour. Now Dow is up 37, S&P's up 250. There is, when I say to my subscribers this morning, watch out for
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So it's worth looking right now at the VIX index, the volatility index. This is the trading at 10.11. 10.41 is a 9-period exponential moving average. And the MACD is turning down. The stochastic is negative at 35%. This is really a fascinating experiment in analyzing and trying to assess where the volatility, when we talk about volatility, most of the time when we talk about volatility, we talk about down. Most people don't say, wow, volatile market, fantastic moves to the upside. But they do say, oh, volatile when it starts to plunge. I'm looking at this, and my suggestion here is that if you're interested in insurance, it might be better to buy, rather than to try to pick the dips, certainly in the low nines. That's when it rallies each time. So that's an idea. Maybe wait for it to get to the 950, 940 area. But my thinking here is based on the weekly chart. It's not intra-week. It is the Friday close. And if you go back in this volatility index, you can go back a year, and you'll find that out of all the weeks, out of those 52 weeks, rarely has the VIX closed above the 9-period moving average. It's traded intra-week many times above it. But a close above it, it was just that period back in March, was it? Let me just tell you right now. Going into the high, the election high, that was April the 21st, the French election high, where it did close above a couple of times over a period of weeks. But most of the time, intra-week, pop, and then back down under the 9-period moving average of the weekly chart. So I'm just suggesting to you, and one of the things I forgot to mention to my subscribers this morning, because I always do, and it's just kind of the back of my mind, but I usually make a big deal about it, is that so far the action and reaction to the markets over the evening into the weekends has not been what you get in a bear phase. A bear phase sees bad news with the futures 12 to 15 points lower at the opening. Rallies tend to falter during the day, and then by the close, the futures close back down very sharply. Then overnight, there's a kind of a rally attempt, and then they come back down in the morning before they open. But there's an umbrella always of bad news. Now, let me explain what bad news is. Bad news could be a weather report. It could be anything. But that's not the issue. I think bad news, if you want to define it as what impacts the market, it is the consistency of news that is interpreted by the market as bad. Could be anything. Could be economic. Could be political. It could be any one of a dozen things. But it has to filter in slowly and then increase in momentum. So maybe once in 2 weeks and the market pulls back sharply, but then that same event, you can't keep having different events. That same event must come up again, and then it must increase in speed. And then the media just has to constantly talk about it, and then you have to have this one day and night where it is just wall to wall, that bad news or that news is interpreted badly. And that's what we haven't had. We've had potential bad news, and the market just shrugs it off. And that's the reason why I've said for quite a while now that when it comes to President Trump, it's actions that are going to count, not words and not tweets. It is what happens in the de facto situation, what is voted on, what is not, those are the things that are going to impact. So all the rest is noise. So the VIX is deciphering that and saying, hey, there's a lot of noise out there. It hasn't affected me. I'm the bad news monitor, and I don't see anything yet. So at 10.18, nothing. Start to climb into the high 11s and then close in the high 11s. Aha, now we're getting somewhere. Close in the 12s on any particular day, fine, not good enough. You've got to close in the 12s for 2 or 3 days. As soon as you start to see the teens being hit, you will see this market triple digit down in the Dow, 17 points in the S&P, and the others will follow. So I wanted to spend a little time to explain my thinking and why I'm looking at this. I'm calling it a consolidation that has the potential to increase in momentum to the downside only when certain factors are measured and measured consistently. And then to add to that, you need to hear, for instance, Micron, I believe this is Thursday that they come out with, let me get this, D, E, and an alternate count. They come out with earnings. So I've said for a little while now, until there is a very negative report by one of the key semiconductor companies, and Micron, of course, is one of those, we can just expect a consolidation in the semis. But if there is bad news and just needs one, and then you put that together with people talking about NVIDIA, saying NVIDIA is at a fantastic move. It's a little bit overboard, a little bit this, a little bit that. And then all of a sudden you've got the makings. If you've got an NVIDIA, let me just give you an NVIDIA, NVDA. Yeah, that's the pattern that I love to look at. This is the rectangle formation with a failure pattern within it, an H pattern, the lowercase h. If NVIDIA at 150.52 starts to trade under 146 at any point this week, watch out. It could be a real quick slide to 139. So this is one of our clue stocks in the general market, because it's a heavy component of the semiconductors. You're going to be watching it real closely. Okay, now let's get a couple of questions. I just need to finish the TLT. The TLT is trading at 128.48, up 70 cents. I had a fabulous move. My target has been the 129.80s, left side high bar to the 131.21 area. I'm not sure if this is the move that's going to take it there, but it is doing exactly what we're looking at, that inside track Chapman wave, inside wedge, this green, I'm making it green right now, uptrend dashed line is the magnet resistance target line, and the MACD is good. Stochastics at 94%. So far, this is acting really well. TLT, and that's suggesting to me quite strongly that in fact we've got money starting to drift from equities into the so-called safety of bonds. Okay, next question. I got a question here. Let me go to this. Put buying, SPY meltdown. Bid for SPY. So if you want, we'll just have a quick look at the SPY. Yeah, to me, sideways right now, the SPY breaks out at 246. It's at 243.33 right now. And it absolutely starts to break down if it takes out the 24.2 support, and certainly if it takes out the low of the 16th of 241.63. Then it's going to go down really quickly. Let's see what this one is here, just real quickly. All right. Well, Paul says, I have to laugh at your comment. Something is wrong here. You ain't kidding. Something is wrong. You put some big bold letters. Yeah, that's not good enough. We've got to be able to define it. I'll be back. Basil Chapman, Tiger Technicians out. Dow's up 35. It's up 2. We'll be right.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, we're back and we're looking at a Dow 46. What I said to subscribers this morning is watch out. There's enough residual strength to see sudden bursts of energy, but lower lows and lower highs is my theme at this particular point. Then I had a question just a few moments ago by Bob. HTZ, that's Hertz. Hertz Global Holdings trading at 10.11, up 0.58, up 6%. So this kind of pattern I've seen quite a few times. In fact, if you look at, was it X? Am I hitting the right key here? Where is it? Where did it go? Oh, I put it in the den. Nope, it needs to be right here. X. Yeah, a lot of these patterns with the rectangle formation. AKS, how's that doing today? Okay, so the SLX, which is the steel stocks, I'm grabbing that because that's the pattern that I'm looking at. It's kind of rectangle at the bottom where it looks like it's trying to get off the ground, and it keeps coming back and retests. So is this the start of a bigger move in Hertz? Wow. There's a flattening of the MACD in the weekly. There's a flattening of the stochastic at 5%. I don't see strength in the weekly, but I do see some strength in the daily, and it's been the sponsor of this big move to the upside. Actually, 3 nice green candles, each one getting bigger. But it's the way it closes. So I'm not sure if you just wanted Bob, just to point that out. Hertz, Caterpillar, XLT, Trump trade, wave count. I'm looking at this and I have to call this new leg A. Now, if you're interested in Hertz, if it's just a comment, that's one thing. But if you're interested in buying Hertz, the way it's looking, it's going to come back and test the 850s, even though it's at 1010. But if you wanted to start a trade, just an idea of a trade, in other words, will it work, won't it work? And you want to get a feel for what's going on, you could nibble right here at 1010. I would actually put a stop in at 945 is the 9-period moving average. I wouldn't even go that far. I'd put it in at 970. Even a 30 cents decline from here would be negative action. MACD is good. Stochastic is not bad, but it needs more, and it needs a story. And I don't see what the story is in Hertz. So I'm just saying, if you want to get started, okay, I would give it time. I'd actually give it a week and a half. If it does start to move into the 12s and you've missed a great move, that's fine, because that would say the weekly is improving, and that should continue into, say, the fall. So the only thing I can say right now is, if you want, you could nibble here at $10.12, unless it's just a comment about those stocks. For instance, Caterpillar right now had a spectacular move. It went to peak F right there. Let me type that in. And then it gave a sell. So it actually gave the sell signal here, the E. And then it went on and made an F. And that's an extension, a little coda, what we call. And that turns into an inverted hat. That's the the other symbol right there, and it's pulling back. And a leg E, possibly a peak E this week in Caterpillar. I'm looking at this and I'm thinking, Caterpillar weekly chart is still good. It could go sideways. The daily is suggesting that it's going to go lower lows and lower highs. Monthly chart is still very good, but it is leg D and it looks a little tired. So I'm just suggesting that, yes, some of these, look at Deere, also had a great move and it's made a peak D and pulling back, D for Deere. I'm calling this an F/C in the monthly chart. All of these look like they need a bit of a breather at best, but it could be a sharper pullback. So now let me do a couple of things here. How am I doing for time? I'm doing okay. I want you to just get back to the VIX. I want you to explain something that I might have missed before. In the monthly chart, whenever there's been a major spike to the upside and you've got a thin-wicked candle, that thin-wicked candle, look, every one of these, I don't know if I want to, I'm going to point them out. There's this one right here, back in May of 2010 at 48.20. Pulls back. There's a little spike up here the month of March of 2011 comes back down. So after each one of these, look, each one, there's invariably a space of a few months. There's one here where it's just 1 month and then it comes back down again. But most of the time, there's a period, a lax period, where you've used up the energy. Now we're looking at something slightly different. You see how they kept getting smaller back in 2013, those spikes? They couldn't get above the 200-period moving average. Look what's happening here. The VIX index is under the 9-period moving average in the monthly. That's 12.01. It's trading at $9.99. The MACD is negative. The histogram is negative. The slow stochastic is at 6.51. That's very negative. And what it's saying is there's the potential for a cup formation, but it's not going to happen if you go to a lower low below 937. But if there's at any point in the month, that's this week, of course, that there's a spike above 12, and then it holds into the close Friday before we get to the July, that's going to suggest that there could be a spike the first week of July to the upside in the VIX index. So I just wanted to go through that to show you that within the context of the historic relevance of these thin-wicked monthly spikes to the upside that fail, usually you've got a couple of weeks to go. But here's something else. It isn't often you get 3 consecutive weeks of rallying above the 9-period moving average in the monthly and then fail. So this is the 3 months failure so far this month. We'll see what happens. Because to my eye, that's building upside pressure towards the 15s. So we'll see what happens. All right. Just needed to go through that. So we did that. We didn't look at crude oil. Question about crude oil. Crude oil is trading up a whole 20 cents. No, 19 cents. Nope, 18 cents. At 43.20. And it's really struggling. It's gone to a trough F. You can call it a trough F/B, but I'm calling it an F for now. And it's a low, it's in a leg E to the downside in the weekly chart. And the monthly has that arch pattern that I say, that is just be careful with this pattern. And that says to me that if I look at the XAL, which should be the most absolute direct beneficiary, I'll probably type that in somewhere. Yes, I did. Take it away there, put it in an E, and go back to this and type in XAL. XAL. It's up 41 cents. It made a peak C, all-time high in the daily. It made a peak C, all-time, it could be an alternate. No, it's a peak C, all-time high in the weekly, and a leg D in the monthly, holding okay, but not breaking out. It's really unusual to fail at a peak C. I'm watching this and I'm saying something's wrong with this picture. We should have been up at the highs in the 117.14 area, the high of the day that is, trying to tackle the high that was made at 118.34 back on the 7th of June. Something's not right. It should be much higher. So I'm thinking, if I look at the IYT, obviously XL, the airlines are part of the IYT. New high in the daily. 173.88 is the all-time high in the weekly at a peak D. We went to a leg C and then a peak C in the monthly. So I'm going to try to put this together because I'm trying to give you the scenario that says what would constitute a failure for the markets and what would be a continuation of this rotational aspect with a chance of making your highs in the Dow and the S&P. I need to look at the transports for that. Basil Chapman, I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Don't forget, great programming. Hey, wait a minute. Larry Pesavento, our wonderful Larry Pesavento, is going to be giving a webinar on Wednesday night, 6 p.m. to 8 p.m. Go to the front page, look for the details. This is about this is about his trading life. He's the people he's known. I mean, what a raconteur. Larry has been everywhere. I mean, he knows everyone in the business. He's worked with the most important people. It should be fantastic. So tune in, just check the front page of TFNN, see what the details are. But really, you don't want to miss that. That is a once-in-a-lifetime opportunity. And let me just, a bunch of emails just came in. So Sarah wants to, well, first of all, yes, the 2-minute E-mini made a peak D, flattening out. It's got until, the next 2-3 minutes before it tries to test 2440.36. I got a feeling this is the pattern that we're really looking at, is another arch formation here. It's had the cup. Now it's going to go back to the arches, rotating between the two. So quick questions. Here we go. IYT. The IYT did make a new recovery high, not an all-time high. I suspect it's going to make that. I'm watching this real closely. Why? Because if the IYT, the iShares Dow Jones Transportation Average Index, fails from here and at 117.46, it suddenly starts to trade under 167 this week, that's going to be a big negative. If it breaks to a new high, I have to consider that that could be part of the rotational process, and that's good. XLE, quick question about the XLE. XLE is trying to form some kind of a base here. It's in leg alternative. Yep, it's gone to a D in the weekly chart. Leg D could be a possible D, and that's where you could get a nice bounce. So I'm looking at it at 64. It needs to break above 65.30. And then all of a sudden, you're looking at a real nice bounce towards the 66s. We'll see, because that could be part of this whole crude oil thing, trying to find some kind of a base here. Next question was Goldman Sachs. GS, trading up to 95 at 220. I think Goldman Sachs is just in a sideways consolidation with a real good chance that it's going to be testing the 212 to 210 area sometime in July. It really has to break into the 228s for me to say, oh, no, this is really good action. Hasn't done that yet. Goldman Sachs, ARNC, is that has to do with those, that has to do with the, trading down 24.26, trading down 1.28, down 5%. This is Arconic Inc. I think it has to do with the tiles on this terrible story, the tragedy London, but I believe it's all over the show in many buildings. So the cladding, not good. I don't want to say other than this looks like, it's a great candle if you look at it right now, because it made a low in the 22s, trading in the 24-25 area, but it's gapped down. I think it's a problem. I would not be touching this either long or short, probably more short than long. A lot more news is going to come out. CLF, Cliff, what is this? Cliff Natural Resources. Nice move. This is A, this is leg B. Yeah, this might be saying, I'm going to have to look at this at the end of the day, that maybe the oil sector is ready for a bit of a bounce in this whole rotational thing. So Cliff Natural Resources, I think it's oil, is trading at 6.67, up 5 cents. A much better candle. Weekly still looks terrible, monthly looks terrible, but the daily says, it could bounce a little bit more. If it gets into the 7s, 721 is the 200-period exponential moving average resistance. Question about the crude. I think I just did. I did crude. USO trading right now at, it's trying to rally. We might be seeing a bit of a bounce. So, Basil Chapman, Tiger Technicians out. If you want to see my work, it's the opening call. Check it out, front page of TFNN. You'll be able to get my service on a trial basis. And any questions you have, just send them to me. So have a great trading day, and I'll see you tomorrow. And stay tuned for some great program. Don't forget Larry's webinar coming up Wednesday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.